The United States government owes $37 trillion. That's more debt than any nation in human history, more than the entire global economy produced just 2 decades ago. And here's what nobody's telling you. They're not planning to pay it back. They're planning to erase it, not through default, not through austerity, through devaluation. Strategic, calculated, invisible theft of purchasing power from everyone holding dollars. And the mechanism they're using? Bitcoin and gold. You're watching the US government execute the most sophisticated debt elimination strategy ever attempted. They're building strategic reserves in Bitcoin and gold. They're preparing to revalue those assets at multiples of current prices. And they're using that revaluation to technically balance a debt that's mathematically unpayable. But here's the part that should terrify you. When they revalue gold and crypto upward, they're simultaneously devaluing the dollar downward. Every dollar you hold loses purchasing power. Every bond becomes worthless. Every savings account evaporates. You're about to be robbed. Legally, quietly, completely. Let me show you exactly how this works. The 1933 Playbook. This has happened before. In 1933, the United States was drowning in debt from World War I and the Great Depression. The debt-to-GDP ratio was 40% and climbing. The economy was collapsing. So President Franklin Roosevelt did something radical. He revalued gold, not by a little, by 69%, overnight. Here's how it worked. In 1933, gold was officially priced at $20.67 per ounce. That had been the price for 54 years. Your dollar was literally a claim on physical gold, but the government was broke. They couldn't pay their debts at the current gold price. So Roosevelt issued Executive Order 6102. He made it illegal for Americans to own gold. You had to turn in your gold to the government. They paid you $20.67 per ounce. Most Americans complied. Then, after the gold was collected, Roosevelt revalued it. In 1934, he announced the new official gold price, $35 per ounce, a 69% increase overnight. Here's what that did. At the old price of $20.67, U.S. gold reserves were worth about $4 billion. At the new price of $35, those same reserves were suddenly worth $6.8 billion. They created $2.8 billion in value out of thin air, just by changing the price, but the debt they owed was denominated in dollars. Those dollars were now worth less relative to gold. The real debt burden fell from 40% of GDP to 25% within 5 years. They erased 15 percentage points of debt just by revaluing gold and devaluing the dollar. And American citizens holding dollars? They lost 40% of their purchasing power. The government transferred wealth from dollar holders to debt elimination. This is not ancient history. This is the playbook, and it's happening again right now. The current debt trap. 230 to 330. The United States currently owes $37 trillion in debt. The debt-to-GDP ratio is 132%, higher than any time in American history, except World War II. The annual interest payment on that debt is $1.2 trillion. That's more than the defense budget, more than Medicare. Just interest, not principal. If rates stay at 5%, interest payments will hit $1.8 trillion annually by 2027. That's 6% of GDP, just to service debt. This is unsustainable. Everyone knows it. The Congressional Budget Office knows it. The Treasury knows it. The Federal Reserve knows it. They've run the numbers. There's no scenario where this debt gets paid back through traditional means. You cannot tax your way out of 132% debt to GDP. You cannot grow your way out when debt grows faster than the economy. You cannot cut spending enough when interest alone consumes 6% of GDP. There is only one option, devaluation. But if they just print money, everyone sees it. Inflation spikes, the dollar crashes, confidence collapses. They need a more sophisticated method, something that looks legitimate, something that looks like smart policy. Enter Bitcoin and gold. The Bitcoin Reserve Setup. On January 23, 2025, President Trump signed an executive order establishing a strategic Bitcoin reserve. The order directs the Treasury to acquire and hold Bitcoin as a strategic asset. The stated goal? Position America as a leader in digital assets. Protect American innovation. That's the public narrative. Here's the real reason. The U.S. government currently holds approximately 210,000 Bitcoin, seized from criminal enterprises. At current prices around $100,000 per Bitcoin, that's $21 billion. Not enough to matter for a $37 trillion debt problem. But the executive order doesn't just direct them to hold existing Bitcoin, it directs them to acquire more. The proposed target is 1 million Bitcoin over 5 years. They're not buying at market prices. That would spike the price. They're acquiring it through seizures, fines from crypto companies, and strategic purchases through intermediaries. They're doing it quietly, because the goal isn't to acquire Bitcoin at current prices. The goal is to acquire Bitcoin before they revalue it. Here's how the revaluation works. By 2028, they hold 1 million Bitcoin, acquired at an average cost of $120,000 per coin. That's $120 billion in acquisition cost. Then they make the announcement. The U.S. Strategic Bitcoin Reserve is operational. We hold 1 million Bitcoin, and we're revaluing it at $1 million million per coin for balance sheet purposes, not the current market price. $1 million, a 10 times revaluation overnight. Their 1 million Bitcoin, acquired for $120 billion, is now worth $1 trillion on the government balance sheet. They've created $880 billion in value out of thin air, just by changing the accounting price. But once the US government declares Bitcoin is worth $1 million per coin, the market follows. Because the US government is the largest holder, they set the floor. Bitcoin doesn't go to $1 million overnight, but it goes to $300,000, then $500,000, then $800,000 over the next year. And while Bitcoin is rising to $1 million, the dollar is collapsing. Because if Bitcoin is suddenly worth $1 million, it means the dollar is worth less, much less. The revaluation of Bitcoin upward is the devaluation of the dollar downward. They're the same event, the gold revaluation. Bitcoin alone isn't enough. The US needs a two-pronged strategy. Bitcoin for the future, gold for the past. The US government officially holds 8,133 tons of gold. That's about 261 million ounces. At current prices around $2,800 per ounce, that's worth $731 billion. But here's the thing. That gold is valued on the government's books at $42.22 per ounce. Not $2,800, $42.22. That's the official statutory price set in 1973. On the books, the US gold reserve is worth $11 billion, not $731 billion. $11 billion. They're holding an asset worth $731 billion and valuing it at $11 billion. Why? Because it gives them room to revalue. The US announces a new gold revaluation. For purposes of US strategic reserves and debt backing, gold will be valued at $20,000 per ounce, not the current $2,800, $20,000. At $20,000 per ounce, US gold reserves are worth $5.2 trillion. They've just created $5.2 trillion in balance sheet value out of thin air. Combined with Bitcoin, 1 million Bitcoin at $1 million equals $1 trillion. 261 million ounces of gold at $20,000 equals $5.2 trillion. Total new balance sheet value, $6.2 trillion. That's $6.2 trillion in assets that can technically offset debt, making the debt to GDP ratio look better, making the government look solvent. And once gold is officially revalued to $20,000, the market follows. Gold doesn't hit $20,000 overnight, but it goes to $5,000, then $8,000, then $12,000. As gold rises to $20,000 and Bitcoin rises to $1 million, the dollar is getting destroyed. If gold goes from $2,800 to $20,000, the dollar lost 85% of its value relative to gold. The real cost to you. Let me show you what this looks like in real terms. You have $100,000 in savings today. The government revalues gold to $20,000 and Bitcoin to $1 million. Over the next 3 years, inflation hits 20% annually. Real inflation. Food prices double. Gas prices double. Rent increases 60%. Your $100,000 in savings now buys what $35,000 bought 3 years ago. You lost 65% of your purchasing power, but the government's debt? It's still $37 trillion nominally. But in real terms, adjusted for the inflation they caused, it's worth $13 trillion. They erased $24 trillion in debt burden. They stole $24 trillion from creditors, savers, and dollar holders, and gave it to themselves in the form of reduced debt burden. This is the strategy, and it's already in motion. The timeline. Here's when this happens. 2025, accumulation phase. The US quietly acquires Bitcoin through seizures and strategic purchases. They don't announce totals. They accumulate in the shadows. They start talking about gold backing and sound money, setting the narrative. 2026, crisis phase. The debt ceiling fight becomes severe. The bond market shows stress, yields spike, confidence wavers. The crisis creates justification for extraordinary measures. 2027, evaluation phase. The government announces the strategic Bitcoin reserve is operational. 1 million Bitcoin valued at $1 million per coin. Simultaneously, they announce partial gold backing. Gold revalued to $20,000 per ounce. This is sold as stabilizing the currency, restoring confidence. The public buys it. But what's really happening? Bitcoin goes from $100,000 to $1 million over 12 to 18 months. Gold goes from $2,800 to $20,000. The dollar loses 70% of its purchasing power. Inflation explodes to 30 to 50% in the first year. The middle class is destroyed, but the debt is erased. Who wins and who loses? The winners. The US government erases $25 trillion in real debt. Early Bitcoin holders who bought at $30,000, early gold holders who bought at $800, the wealthy with assets in real estate, stocks, businesses, foreign governments with gold reserves. The losers: the middle class with savings in dollars, retirees on fixed incomes, bondholders repaid in devalued dollars, pension funds holding government bonds, workers whose wages don't keep up, small businesses that can't raise prices fast enough. The purchasing power evaporates. Wages don't keep up with inflation. Real wages fall 40 to 50%. Living standards collapse. This is not hyperbole. This is the mathematical outcome of the strategy. What you must do now: you need to act now, not later. Once the revaluation happens, it's too late. First, get out of dollar-denominated assets. Bonds are death. Government bonds, corporate bonds, any bond denominated in dollars will lose 70% in real terms. Sell them now. Cash is death. Holding dollars in savings accounts, money markets. Keep only 3 months of expenses, no more. Second, get into hard assets. Physical gold, not ETFs. Physical gold you hold. Coins, bars, stored securely. Target 10 to 20% of net worth. Bitcoin if you understand it and can hold it securely. More volatile than gold, but larger upside. Target 5 to 15% of net worth. Real estate with productive use. Farmland, rental properties in strong markets. Productive real estate that generates income. Third, diversify internationally. Don't keep all wealth in US dollars. Consider foreign currencies from countries with low debt. Swiss francs, Singapore dollars. Buy foreign real estate. Foreign stocks earning revenue in non-dollar currencies. Fourth, build skills and relationships. When currency collapses, what matters is what you can do, what you can produce, trades, medical skills, agricultural knowledge. Community resilience matters more than cash when currencies fail. The U.S. debt to GDP ratio is 132%. The interest payment is $1.2 trillion annually. The government cannot pay this through taxes or spending cuts. Devaluation is the only option. This is historical precedent. Every government in this situation has chosen devaluation. The U.S. did it in 1933. They will do it again. The when is 2026 to 2027. The timeline is visible. The executive orders are signed. The bills are introduced. Narrative is being set. This is not conspiracy. This is policy. Visible policy. The world's central banks are preparing. Buying gold at record rates. China is accumulating Bitcoin. Russia is stockpiling gold. The BRICS nations are creating alternative payment systems. These are governments with intelligence agencies and economic advisors. And they're all preparing for the same thing: a dollar collapse and monetary reset. If they're preparing, why aren't you? Strategic Bitcoin reserve is not about innovation. It's about creating an asset to revalue. The gold-backed dollar talk is not about sound money. It's about justifying gold revaluation. Every policy move is setting up the reset. You're the collateral damage unless you position yourself correctly. If this opened your eyes to what's coming, subscribe. Because when the revaluation hits, when your savings evaporate, you'll want to understand exactly what happened and why. The window is closing. Act now.